Hello everyone. So in this video we will see how to select intraday stocks. So it's not like I like this company so I will trade it. Let's say I like Apple products, and so that doesn't mean that I have to trade that stock. We need to look at some technical parameters, and that's how we decide if a stock is even worth looking at for the intraday trading. So in this video we will see what are those technical parameters. So first let's understand what is intraday trading. Here intraday trading means I am buying and selling on the same day, and why I do that is because many of the brokers give me leverage, which means with less capital I can buy more shares. That also means that I have more risk, so I need to consider which stocks that I should trade intraday, and that's the whole point of this video. So one of the first thing we should look at is the volatility index. So if the stocks moves very wildly, it's very risky. Ideally, I look for stocks where the daily price movement is less than 2%. That means the stock is stable and we don't have to lose big amount of my capital in one wrong trade. So what is exactly this volatility? So volatility just means that how much our stocks moves in a day. So high volatility means that stocks can be unpredictable, and for intraday we always want predictable and stable movement, and that's why we choose low volatility stocks. So how do I know that which stocks have low volatility? There is a number called as beta, which you can check this beta value for every stocks on several websites like Money Control or National Stock Exchange website. And this beta value, if it is less than 0.7, it's generally considered as safer for intraday trading, which means that let's say beta tells you how volatile a stock is compared to the market. A beta less than 1 means it's less risky, and if it is 1, it's the same volatile as the overall market. And I usually prefer intraday stocks that have beta value less than 0.7, which means it's safe to trade them with no big price movements within a single day. So what exactly is beta is that in beta number we are just comparing the stock's movement to the market value. Let's say if the overall market Sensex goes up by 1% and our stocks goes only up by 0.7%, then beta is 0.7. It's that simple. So we can also look at something called as standard deviation of daily returns. It means that how consistent the price movement is statistically. So if it is low value, that means it's good and it's safe for intraday. It means that this stock with low standard deviation will not behave like a unpredictable one. We should also importantly choose a stock that has very good liquidity. That means that this stock has very high volume. Ideally, it should at least have 1 million shares that are traded every day. So if no one is buying or selling these stocks, then we will be stuck and there will be high price slippage. We could have seen that the candles jump in the stock market. Today it was at 1 rupee and suddenly the next candle goes with a gap up of 2 rupees within a 1 minute time frame. This occurs because there are low trade volume, which is bad for intraday. And sometimes you have an exit order even though the price reaches, the wick touches your exit price, the order doesn't get executed because there were no buyers or sellers to exit your trade because of low liquidity. And that's why I prefer stocks from Nifty 50 or any national index of the country you are in. These are usually active, they have high volume and less chance of getting price slippage or trapped. And what exactly is this liquidity? It means that I can buy and sell stock easily and I don't have to wait, and your orders will get executed. And stocks that don't have liquidity are very risky, especially in intraday. Also, I consider going into large cap stocks in the intraday, preferably from defensive sectors like FMCG or pharma or utilities. These are actually not sensitive to economic cycles. We should avoid always cyclical sectors like auto or real estate. They are more risky. We never know how hedge funds take out money and put it in someone, and so these are actually doesn't they will have false breakouts, all this trapping, bull trap, bear trap. So I prefer always from defensive sectors. This is from my experience just. And so what exactly is defensive sector? So in defensive sectors are like medicine, toothpaste. People buy it every day. Even in a recession, these are absolute necessary. These stocks don't crash easily because people will buy these products. Cyclical sectors, on the other hand, are the ones that go up and down with the economy. Tomorrow there is chip shortage, all auto sectors will fall. Another aspect is that I also check fundamentally stable company. So fundamentals are very important even for intraday. So we have to check if the company has consistent earnings, low debt to equity ratio, and is not a loss-making company. This all information is there right there on Money Control or NSE or any stock-based websites. You can get this report even from your stock market broker. So before I choose a stock for intraday, these are my filters. So I don't go with the company that I like. These are the facts that we should consider when choosing an intraday stock. For this, you can use any of the free websites like Money Control to check beta or liquidity or what sector they belong and the fundamentals of the respective companies. And as a disclaimer, this is not a financial advice, it is purely for educational purpose. Always you should consult a financial advisor before trading, and trading in stock market always involves capital risk.